is my advice on what we can do with respect to Euro, GBP, USD, CHF, USD, CAD. The four majors, what we can do to trade that without us having to complicate the whole operation and execution. Uh, so it is based on one simple principle, is just to follow the trend. So nothing follows the trend quite as well as the moving averages. But as we know, moving averages can be a lot unclear. So there can be entanglement of moving averages, which lets us, which creates confusion while executing the trend clearly. But what this does is cleans that for us and lets us trade without any headache and visualize trades in a manner which is very clear to see and execute. So essentially, the principle here is there is obviously a longer period that is going on. So the blue and the yellow, that band you can see, when the price is above, price and the smaller bands are above this cloud and above the blue cloud specifically, that's where we long. When it is below, that's where we short. So it's very simple. For this particular scenario, this is where we become long focus, but we are not having an execution signal here. So this is not the execution signal. And then again, we are having this. So this is not again the execution signal. So we need a signal for that. How do we get that signal? We get that signal from the smaller MAs. So when smaller MAs are doing this, price is breaking below and closing above, it is very simple for us to long there with the stop below either the candle low or the band below the band, which is in this case would be 25 pips, and target whatever 50 pips or something, but it eventually goes to 100 pips. So it's very simple for us to execute, hold, also visualize the trade through the life cycle, meaning if we are seeing this, all this red candles and all this noise that is happening, all this is can create panic, confusion. Like for example, this candle right after the entry of the trade, this candle alone would create a lot of confusion while we are executing normally. Is this a double top? Is this something else? The price will crash down. Things like that will come into our mind when we are executing without the trend and without having something that keeps us in the trend. So this band, smaller band, keeps us in the trend, and we can exit at 100 pips, or we can exit when the band, the band breaks below the R band. So here you can exit here. There is obviously an exit here as well. There is an exit here, which is 25 pips. But again, an entry is there as well. So let's say we entered, then this would be a separate trade. But if we kept that, it would be a completely same trade. So it depends on the execution here as well. But essentially speaking, it's still in profit, and it's no reason to exit that yet. Now, in this period, so you would say why we are not trading this whole downside short period. What are we doing to catch that? Absolutely nothing. We are not trying to catch that. So it is important to understand that we'll not be able to catch every single trade, and some of these movements will be missed. As long as we catch good moves that are confirmed and high quality, it's fine. That's what we can do. Obviously, then when the change of pattern happens, let's say one candle later, maybe this change of pattern has happened. We are trying to then execute shorts. Again, it's a very simple thing, and above the band, which is 15 pips, and if we kept the trade, it's again 60 pips. So in this case, what we are doing is we are following the long-term trend, we are following the short-term trend, and even there, if we look even more inside, there is an even shorter term trend that we can be following for insights into the smaller time frame price action. Sometimes it can go outside of so something like this, when bubbles like this happen, generally that's a reversal signal, and we can exit trades, etc., etc. But generally that will stay very much with the price. Even if we don't look at it, it's fine. But yeah, the idea here is absolutely clear and quite quite it's fairly simple. So again, for example, our band changes color here, and we are getting a trade here. This we can catch. Then it is flipping green. We are below a longer time frame trend is not there, and then it changes the color. So again, if we look at this confirmation on 1 hour, enter beyond, keep the entry exit beyond the band, and it's only 15 pips, and if we keep it, that's 100 pip. That's 5.5 risk to reward. And what the magic is, it's going on for almost 2 days, but at any point we're not having to worry about these noises happening. So all these noises are happening, we're not having to worry about, because we are following the trend. So always following the trend, any situation. And this works very well in this in these pairs like Euro, GBP, CHF, CAD, because when situations like this are, so these are the situations that we are trying to avoid, and that's why the other systems are not working. So areas like this is the reason why the normal system is not working. So what's the issue here? Why would how does this approach protect us in these cases? So obviously, what it does is protects us from shorting any of these areas, because the band remains bullish. It protects us from shorting any of these areas. It protects us from longing any of these areas, because the band has flattened. There is no clear trend here. There is no clear momentum here found, and the price is fluctuating up and down. But how do we know this will go flat and this will go up? It's fairly simple. Even this is not a signal, because we are bearish. When it is becoming a signal is here. And if we can enter here or enter here and enter here, anywhere we can enter, we have a clear mechanical stop of band being with the price. The band will protect the price, and when it breaks below like this, that's an exit. And when things are happening like this, up and down, we are automatically protected. Again, the band changes color all the way here. So if we trade that breakout, even if you're late, let's say very late, so this is very late trading. So even if you're late and we put the stop below this band, that's a 46 pip SL, we're getting 70 pips. That's still 1.5 hour. And this is something that can repeat and repeat and repeat through and through, and protect us from all this headache of what to do in noisy scenarios, and when to exactly execute our trade without having to worry. So you can see this is not really, if we look at the 1 hour, this is not really a very good price action. But what it does is it gives us the signal at the right time. So the flip happens here, the color band changes here, and if we short any time after that, so even if we short here and put the SL above the cloud, 30 pips, that's a 3.5 hour trade, and it stays flat for almost a day, then it eventually gives us the return. So that's what I'm speaking about. And when the big trends happen, that's where it becomes even lucrative. Huge rallies can be caught on this. So those 200 and 300 pip movements on these assets that we see, we can catch this via these, and not having to worry about what is going to happen, what is going on in the market, what are the other metrics are there. Even let's say, even if we go into CAD, you can see the price falling and falling, and each time it is rejecting from the band, and each time it's a good trade, 80-90 pip trade each time. And it is so simple, it's so clear to look at. It is not giving a lot of false signals, and it is protecting us in scenarios like this by not allowing us to trade. So when things are happening like this, it is protecting us by not allowing us to trade and not allowing us to gamble here. Even USD CHF, it's such a clean system. It's generating even signals in something like USD CHF. I think, yeah. So yeah, these are the shorts that we were planning, and around that 81 mark, and see, like when it flips, so we're not having clarity when to execute. This would be the execution point start. So as soon as this happened, it is okay to short. Now what we have to find is the short signal, and the short signal comes here. And if we put the SL above that, that's only a 15 pip SL. It might seem low, but that's what it is. And it gives, on the first trial, it gives 38 pips. If we exit, that's fine. If we enter again, when this turns red here, and again, it's a 20 pip SL, and then the trade just goes like inverse vertical on the opposite side. And obviously there are exits marked in between as well. So if we zoom in very much highly clearly zoom in, yeah, around these levels, these are the exit points. This is one exit point. You can exit partial, you can exit fully, but this is again an entry point. And that is the separate trade of your own. Like, you can even add into the size that is remaining here. So let's say we are short from before, you can add more shots here and they increase the size allocation and get another 35 pips. Again, we are getting another short signal here. Even if you're late, let's say very late, that's a 31 pip SL. But what we are getting in return is more than enough. That's a 60 pip downside. So many signals are being generated, and price is allowing us to trade that in a smooth, tradable fashion. It's not complicated. It's just two bands of moving average, EMA Cloud, and it's OHLC. So high-low prices are being considered when this is being printed. So it's not volatile like the normal moving averages. It's very simple to execute on the basis of on the basis of trend. It's not complicated. It's easily visible. It's a visual representation of what a chart like higher time frame based. So 1 hour I selected because what is happening with respect to these four assets is the 30-minute and 15-minute are creating a lot of noise, which even if we enter a trade could take us out before that move actually happens. So we need that kind of confirmation, solid confidence that we can stay in this trade and it will not backfire on us. It will not go against. Obviously, it can go against us, and SL can be there and all that. But it will be not like that. It goes for us. It goes in our direction. It profits, but it takes us out before that SL. It will happen very less in here. So that's been a problem for us. We have had trades worked, but before the trade worked, we were taken out. So that must not happen. So that's the main objective I had yesterday, and that's something that I worked. I went through so many technical signals, like all these, everything. So you can see how many things that are there here. From front to back, like everything that is available on TradingView, I have almost completed in the last 3 days. I think for these four assets, the majors, and even some pair that exhibit similar characteristics. So you'd say what other pairs can show similar characteristics. So we don't know that, but when we observe something that shows similar characteristics, it will work in this strategy. So I don't know if GBP CAD is similar price action to these, but if it is, if we establish that it will also work in that. But because I have extensively done this on these four assets, I can say that with confidence in these four assets, this will work. Euro, GBP, USD CHF, and USD CAD. So for the yen pairs, we have a separate thing. For these four major pairs, we have a separate thing. I am selecting out AUD USD and NZD USD because of their fundamental factors and because of their noise. You can see their trends are not symmetrical, or I would say they are not smooth enough. So whenever even they are having big moves, this is big move. This is not a smooth move. This is not a smooth move. This is not a smooth move. Whereas in Euro or GBP, when big moves are happening, let's say big moves are happening, smooth, much smoother than AUD, and on the rallies, upside rallies, it's nothing like this. Like, it's very smooth. This is as smooth as they can come. Yeah, no major pullbacks, no noise. Obviously there is noise, but no downside noise. It's flat noise. Flat noise is good. Downside noise is bad. For example, this is downside noise. On an uptrend, this is downside noise. This is bad. That's why we change, and that's why we reset, and that's what we enter around again here. That's the trade. So that's why I singled out AUD, NZD pairs even before I came into this. I don't think their price action is like worthy enough for us to trade. So the factors they bring and the opportunities they bring, they don't line up. They are more headache than opportunity. So obviously that's not something that we would want to do. So I suggest Euro, GBP, CHF, and USD CAD on the majors. On the yen pairs, we have 5 yen pairs. Obviously, apart from all the other commodities. So 9 FX pairs from this universe, I suggest. I don't know how the exotics do, because that's a separate factor. That's also a lot of fundamental factors that could come into play. But again, we are seeing USD ZAR respecting this very much. So it's quite smooth. So I don't know, it could work. So we'll have to see how they work. But for the moment, I am underlining the 9 pairs that I have gone through and selected from all the major and cross universe. So there are like 23, 30. So we are narrowing it down to 9 pairs on at this point. So I think that's about it for this. Yeah, I will accompany this video with a note, and we can discuss. Thank you.